Supertrend is one of the simplest and most effective indicators for identifying trend direction and spotting potential trade entries. It overlays directly on your price chart and helps you stay aligned with market momentum using a clear, color-coded signal. But to use Supertrend effectively, you need more than just reacting to color changes. You need to understand how the indicator is calculated, how its values adapt to price and volatility, and what those shifts actually mean. In this video, part of our series The Best Trading Indicators Explained Step by Step, we'll break down Supertrend from the ground up. You'll see the full formula directly on the chart using our custom table, and we'll apply it to real-world market examples. Less noise, more signal. A step-by-step breakdown that actually makes sense. Let's begin by adding Supertrend to the chart. On TradingView, open the Indicators menu and type Supertrend in the search bar. You'll see multiple results, including community-created versions. To keep it simple, select the one listed under the Technicals category. That's the official built-in Supertrend indicator provided by TradingView. By default, Supertrend uses a 10-period ATR length and a 3x multiplier factor to calculate its signals, all based on the current chart's price and volatility. Once the indicator is added to your chart, hover over its name and click the gear icon. This opens the settings panel where you can fully customize how Supertrend behaves and appears. Now let's go over the full settings of the Supertrend indicator, starting with the Inputs tab. At the top we have ATR length. This controls how many periods are used to calculate the average true range, which defines the volatility component. The default is 10.0. Next is factor, which is the multiplier applied to the ATR to determine how far the Supertrend line sits from price. The default value is 3. Under calculation, the time frame is set to chart, meaning the indicator will follow whatever time frame you're currently viewing, whether 5 minutes, 1 hour, or daily. The checkbox. Wait for time frame closes ensures values are confirmed only after each candle closes, which helps reduce false signals. Finally, under Input Values, the option Inputs in status line lets you show or hide the indicator's parameters and real-time values at the top left of the chart. It's useful to keep this enabled for quick reference. Now let's switch to the Style tab. Here, you can customize how the Supertrend indicator appears visually on the chart. At the top, you'll see checkboxes for uptrend and downtrend. These control the visibility of the lines that represent bullish and bearish market conditions. You can enable or disable them individually depending on your preferences. Next to each option, you can customize the color, line thickness, and style. By default, uptrend is green and downtrend is red. Below that, you'll find options for uptrend background and downtrend background. Enabling these fills the chart background with subtle shading during bullish or bearish trends, making it easier to interpret trend direction at a glance. There's also a body middle checkbox, which is disabled by default. If enabled, it adds a central line that can help some traders fine-tune entry or exit zones. Under Output Values, the precision setting lets you control how many decimal places are shown for the indicator's values. The default option adjusts automatically based on the instrument and is usually the best choice. Finally, you have two additional display options. Labels on price scale adds markers on the right-hand side of the chart showing current Supertrend values. And Values in status line displays the real-time values and parameters of the indicator in the top left corner for easy reference. Finally, we have the Visibility tab. This tab controls which time frames the Supertrend will appear on. You will see options for ticks, seconds, minutes, hours, days, weeks, and months. Each row lets you set the visibility range, such as from 1 to 59 minutes or from 1 to 24 hours. If a box is checked, the Supertrend will be visible when that time frame is active. If it is unchecked, the indicator will be hidden during that range. At the bottom, there is also a ranges option. This allows for more advanced visibility control, but in most cases, you will not need to use it. With all these settings adjusted, your Supertrend is now fully configured and customized. In the next step, we will look at how the Supertrend calculation actually works. Now that we've covered the default settings of the Supertrend, let's take things one step further. To help you truly understand how this indicator works, we've created a custom panel that breaks down the full Supertrend calculation directly on the chart. Instead of just showing the final result, this version displays each step in detail so you can see how the signal is built from raw price data. The first step is to calculate the average true range, or ATR. This value measures recent market volatility and is based on a user-defined period, typically 10 candles. The Supertrend uses this ATR to adjust its sensitivity and adapt to changing market conditions. Once we have the ATR, we move to step 2, calculating the basic upper and basic lower bands. These bands are derived from the average of the high and low prices, often called HL2, and then adjusted using a multiplier, known as the factor. The basic upper is HL2 plus the factor times the ATR. The basic lower is HL2 minus the factor times the ATR. These two levels form the initial framework for the trend signal. In step 3, we refine these levels based on the previous candle. If the previous close was above the prior supertrend line, the system updates the final upper by taking the maximum between the current basic upper and the previous final upper. If the previous close was below, the final lower is updated by taking the minimum between the current basic lower and the previous final lower. This filtering smooths out the line and prevents frequent whipsaws during minor price fluctuations. Step 4 is where the trend direction is defined. If the current close is above the final lower, the trend is considered up, and the super trend line follows that lower boundary. If the close is below the final upper, the trend is considered down, and the line tracks the upper boundary instead. At the bottom of the panel, we also include a status section. It shows whether the current trend is up or down, and whether there has been a recent change in direction. This gives you a clear snapshot of what the indicator is signaling in real time. This step-by-step breakdown makes Supertrend far more transparent. Instead of just seeing a line change color, you now understand what's happening behind the scenes, how each component of the formula responds to volatility, price direction, and past data. For any trader who wants to move beyond just following signals and actually understand them, this kind of breakdown is essential. Beyond the math, let's pause for a moment and look at what the Supertrend indicator actually shows us on the chart. At its core, Supertrend is a trend-following overlay that adapts to price action based on volatility. It doesn't form a channel like other indicators. Instead, it plots a single dynamic line, either above or below price, to signal the current trend direction. When the super trend line appears below the price, it indicates a bullish trend. When it shifts above the price, it signals a bearish trend. The change in direction only happens when price crosses the super trend level, and that crossover becomes the core signal for many traders. But here's what makes Supertrend unique: the way it adjusts its position based on both volatility and recent price movement. The use of average true range in its calculation allows the line to automatically expand and contract depending on how active the market is. That means tighter markets result in closer stop levels, while volatile environments push the supertrend line further away, helping reduce false signals. Most traders only look for the moment the line changes color, but that's just the surface. The real insight comes from how and when those changes happen. For example, if price gradually pulls back into the super trend line but doesn't cross it, that can confirm trend strength. On the other hand, a sharp cross with strong momentum may suggest the start of a new phase entirely. So every time the super trend line shifts sides or even holds steady through volatility, it's not just a passive filter, it's a reflection of changing trend strength, volatility, and market structure. This visual simplicity is what makes Supertrend such a popular choice. With just one glance, you can immediately tell whether the market is trending or not, and whether you're trading with or against the prevailing move. Now here is something crucial, and it needs to be said clearly. One of the biggest mistakes traders make with the Supertrend is treating it like an automatic buy or sell signal. They see the line flip from red to green and rush to buy, or they see it turn red and immediately sell, without considering anything else. That's not how Supertrend is meant to be used. The line is not a magic trigger, it's a trend filter, designed to help you follow momentum, not predict the exact turning point. Using it blindly, without context, is a recipe for trouble. Many traders lose money because they oversimplify what this indicator does. They buy just because the trend turns green, even if it's already extended. They sell just because it flips red, even in the middle of a range. That's not trading with discipline, that's chasing signals. To use Supertrend effectively, you need context. You need to know the broader trend, the structure of price, and how volatility is behaving. You need to ask, is this a breakout or a fake out? Is the market trending or just chopping sideways? Let's be clear, there are powerful strategies that use Supertrend as part of a broader system. You can combine it with price action, moving averages, volume, or volatility setups. And we have separate videos that show how to do that, step by step. But that's not the goal of this video. This video is about the foundation, about understanding how Supertrend really works and the risks of using it without knowing what it's showing you. Because no matter what strategy you follow, understanding the math, the logic, and the behavior behind the indicator is not optional. It's essential. And that brings us to something we'll repeat in every video of this series. Because truly understanding this one principle can change the way you trade. If you've already heard this message and it resonates with you, feel free to skip ahead. But we strongly encourage you to stick around and even replay it until you can repeat it by heart. This isn't just theory, it's the foundation of consistent, sustainable trading. Here's something every trader needs to hear, especially if you're just starting out. Indicators are not magical signals. They don't predict the future. They simply reflect what's already happened. They're tools, valuable ones, but still just tools. They help you read context, not control outcomes. The real problem begins when traders expect certainty. When they treat indicators as if they guarantee success, that mindset leads to frustration, disappointment, and an endless cycle of jumping from one strategy to another. To really understand why this happens and how to avoid it, let me share a powerful idea from Mark Douglas, one of the most respected voices in trading psychology. He once explained that many traders believe their system or indicator told them what was about to happen. But in reality, the market moves because of the conviction, or lack of it, between buyers and sellers, not because of any mathematical formula. He pointed out that most of the reasons we hear in financial news are just stories made up to sound logical after the fact. And this illusion of certainty is what makes traders feel betrayed by their systems, thinking the methodology failed them, when in fact, no technical method can predict what will happen next on a trade-by-trade basis. As Mark said, technical systems only tell you what's likely to happen over a series of trades, never the next single one. And just to show how unpredictable the market really is, Mark once told a story about a trader he mentored. This trader was an excellent analyst, one of the best Mark had ever met, but he struggled to execute trades successfully. So Mark advised him to focus on analysis instead of trading other people's money. The man followed his advice and became an analyst for a major firm at the Chicago Board of Trade. One day, the firm's chairman, an old-school grain trader, sat down with him. The chairman was skeptical about technical analysis and wanted to see how it worked. As they watched the soybean market move within a range, the analyst confidently said that the current price would be the low of the day. The chairman laughed, picked up the phone, and ordered the sale of 10 million beans, 2,000 contracts, instantly driving the price down 10 cents. Then he turned to the analyst and said, "If I can do that, anyone can." And that's the lesson. Sometimes it takes just one player with enough size or conviction to completely destroy your perfect setup. So, the next time you find yourself waiting for that perfect signal, remember this: it only takes one player with enough power to make your setup irrelevant. That's why mindset matters. That's why context matters. And that's why indicators, no matter how popular, are tools, not crystal balls. And that wraps up our breakdown of this indicator. In every episode of this series, we'll keep reinforcing the same core message. Indicators don't give you an edge. How you use them does. To help you move from theory to practice, check the card above and the description below. We've linked real strategies that use this indicator in action. And if you want to keep growing, take a look at our full training programs. We've got smart money concepts to help you understand how the big players move the market. Technical analysis for day traders, focused on fast, practical decision-making. The Wyckoff method, to help you read price and volume with structure. And most importantly, our complete trading psychology playlist, because no matter what strategy you use, Mindset is what makes it work. Take the time to study. Focus on building real skill, not chasing shortcuts. Because at the end of the day, it's not the indicator that makes you profitable. It's how well you understand and use it. I hope you enjoyed today's video. If you found the content helpful or engaging, please give it a like, as this helps the video reach more traders like you. And don't forget to subscribe to the channel and turn on notifications so you never miss our latest insights on the markets and practical trading strategies. Sharing this video with your friends or on your social networks can make a big difference and helps our community become stronger. Now, if you want to go even deeper and get access to exclusive content, early video releases, and extra tools to support your journey, consider becoming a member of the ComLucro Trader community right here on YouTube. It's a way to support our work and a smart investment in your own development. Thanks for watching, and I'll see you in the next video.